the president and COO of TKO Group.
Thank you, Stephen.
So, Mark, tomorrow is the one-year anniversary of TKO becoming a publicly traded company. So to start, I thought it'd be great, just if you could update us on the confidence behind the thesis of bringing both the UFC and WWE together, some of the things you're most proud about over the last year, and what opportunities looking ahead you're still most excited about.
Well, we've got a major company note going out tomorrow morning, and I'll make sure you get a copy of it with all of our highlights. But yes, it is the one-year anniversary tomorrow, so very exciting for the company. And I would tell you that to say that we're pleased with the transaction would be a major understatement. I think our conviction grows daily when it comes to the industrial logic behind putting these two assets together. Both assets are extremely complementary, and I'd remind you that roughly 8 years ago, when Endeavor bought UFC, similar situation. So we know this playbook. And for the UFC, how it turned out was at least the last 5 years, we've had record top line, record EBITDA. ESPN deal speaks for itself, incredibly strong. There's a real demand for premium sports content right now. And we think that when it comes to the WWE, we can follow that same roadmap, that same playbook that we can talk about, and it will continue to bear fruit for us. I think break it down in really the way we look at it is, financially, we're in a strong position. We have a strong balance sheet, just 2 times levered. We're coming off record earnings in 23 for us, and even the first half of this year has been a record for us. At the same time, we're highly cash flow generative. Now move to the side of that and look at the sort of the event economy right now, which is hot. Experiences, events, hot, and sports are at the top of that food chain, so we're sitting in a good place. And the KPIs that make up what we do, everything from ticket sales to sponsorship and global partnerships to premium experiences to site fees, they're all trending in the direction showing that materially the event economy is strong and we're seeing material results. And then finally, I would just say on the integration of it all, which is so important, right? We're a year in here, but we still have so much more to do, top line and the cost structure. But we guided the market to, on an annualized basis, that we would reap $100 million in net cost synergies, and we've blown through that. And we still see there's more to do. We have a lot of work to do there. But we've meshed our teams together, best in class, and that's resulted in an amazing media deal with Netflix for Raw and obviously a lot of international content. NXT moving over to CW at a record price there and a big increase. And, of course, SmackDown moving back to NBC, but NBC Comcast has been our home for a long time when it comes to WWE. So the media deals have turned out great, and that's because you're taking best-in-class people and putting them together. You've got Ari Emanuel working on the deal. You've got Nick Khan working on the deal in WWE. Lawrence Epstein working on the deal. Andrew Schleimer, who's our CFO, all with deep experience in cutting media deals. And then you've got IMG behind it for all the market intelligence. That's been really strong. And when you look over to some of the other big revenue drivers, on the global partnerships front, we have Grant Norris-Jones, who's huge success in what we built at UFC, largely because of his strategy and his execution, now running it for both. And Peter Dropic, who's also the best in class, running live events and ticket sales for both properties. So you sit in a good place, and every night I go to bed knowing that those two guys are thinking about global partnerships, which is so high margin, and ticket sales, which is such a big part of our business when you do 300 events a year combined. You feel like you're in a better place. And, of course, I can mention their names a lot because they're both under long-term contracts.
That's a great